If a seller is willing to negotiate, should the buyer ask for a lower price or ask the seller to help pay closing costs? The answer depends on what the buyer needs most: a slightly lower monthly payment or less money out of pocket at closing. I'm Reann Gonzalez with Edge Home Finance. Let's compare the numbers. Okay, so now let's get into it. Let's suppose a home is priced at $300,000 and the seller is willing to negotiate by $9,000. One option is to reduce the price to $291,000. Let's assume the buyer is making a 5% down payment and using a 30-year fixed rate mortgage. This is only an example, but a hypothetical interest rate of 6.5%, the $9,000 price reduction, would lower the principal and interest payment by approximately $54 per month. It would also reduce the buyer's down payment by about $450. That is helpful, but it may not provide as much immediate savings as many buyers expect. Option 2 is to keep the price at $300,000 and request a $9,000 seller contribution. Subject to the loan program limit and the property appraising for the contract price, that contribution may be used toward allowable closing costs, prepaid property taxes, homeowners insurance, discount points, or an eligible interest rate buydown. The seller contribution cannot normally be used for the buyer's required down payment, and the buyer cannot receive unused funds as cash back at closing. But if the buyer has enough eligible expenses, the $9,000 contribution could reduce the cash needed at closing by as much as $9,000. For a buyer who has enough income to qualify but wants to keep more money in savings, seller pay costs may provide considerably more immediate relief than a price reduction. The contribution might also be used for a permanent interest rate buydown. Depending on the available mortgage pricing, that could potentially reduce the payment more than the $9,000 price reduction. However, we need to calculate the break-even period. Paying points only makes sense when the monthly savings and the buyer's expected time in the loan justify the upfront cost. A temporary buydown may lower the payment during the first 1 or 2 years, but the buyer must still qualify using the full note rate. The funds are placed in a buydown account and used to help make the scheduled payments during that temporary period. Seller concessions are not automatically the better choice. We must consider a few things: the home's appraised value, the buyer's loan program and down payment, the program's seller contribution limits, the buyer's available cash and required reserves, how long the buyer expects to keep the home and mortgage, and whether the buyer needs the most help with the monthly payment or the cash required at closing. This is why we as the lender should be involved before the offer is written. If the requested contribution is too high, the buyer may not have enough eligible expenses to use all of it. If it is too low, the buyer could leave valuable negotiating dollars on the table. A stronger offer is not always the one with the lowest purchase price. It is the offer structured around the buyer's most important financial need. Before you make an offer, send me the property address. I'll help you compare the real payment, cash to close, property taxes, seller paid costs, and rate buydown options before you move forward. Please like, share, and subscribe for more mortgage and home buying tips for El Paso and Southern New Mexico.